Here we are on this Thanksgiving Eve. I'm sure your turkeys are being properly prepared for tomorrow. We'll talk about what that means in just a moment. Have a little fun with you with the question I asked: what stocks might go up with some of the holidays right in front of us? So I'll show you that in just a moment. We have Cameron May with us in the chat. We welcome him. We welcome also all of you as well. We got Thea, Kevin, Lido Len, Bill, and many others. Many of you might be going to Costco, Sam's Club, Walmart. Good luck. Wear your shoulder pads and helmets, and be careful in there. Man, it's like buying Christmas presents right before Christmas, the day before. It might be tough. Hopefully, you've actually already have your watch list fulfilled, and you're just ready to go. Now, just real quick as we get started, remember that with what we discuss here today, it's done for informational purposes only. Should not be considered an individualized recommendation, endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of research. That's a starting point. That's not the ending point. There's many other types of analysis that are very interesting, maybe even more interesting than technical analysis. Just saying. Also remember that the paid money software application is done for educational purposes only. There's risk associated with dividend paying stocks because they might not continue to pay the dividend. They could raise the dividend, cut the dividend. It's not infinite. And also remember, when we talk about investing in stocks, it involves risk. Now, today what we want to kind of talk about is I'm going to talk a little bit more about growth areas or growth stocks in general. And what I want to do with that is I want to talk about two specific sectors as we bring some setups when we're talking about trading growth and value. We're going to talk about those two sectors and looking for setups in those two spaces. Now, riddle me this, okay? If we were to ask what maybe stocks might benefit from Thanksgiving tomorrow, well, I don't know if you've been watching. So when you have Thanksgiving, right? Now remember, by the way, position sizing is still in effect tomorrow, okay? Still in effect. Just because the stock market's closed doesn't mean position sizing doesn't count. Len, I'm talking to you and your brother, okay? Tell your brother hello. Now, the biggest actually thing is, I don't know if you've been noticing, but some of us, not all, might wear stretchy pants on Thanksgiving. And here's Lululemon that has actually been going up as maybe sales have been surging potentially for stretchy pants. Maybe joking a little bit, okay? But clearly someone has actually been buying some stretchy pants ahead of that Thanksgiving. Just want to point that out. Maybe if you weren't looking. Now, the biggest actually thing is, tomorrow you're like, maybe somebody was looking at that stock for a reason. Now, let's talk about sentiment for just a moment, okay? Now, first off, I want to kind of just go to this left-hand side, and one of the areas that I want to look at just real quick that I noticed there was a little difference on. This is the number of stocks above a 50-period moving average. So it's a percent of the S&P 500 companies that are trading above their 50-period moving average. We have actually had, up until recently, maybe today, just kind of like a downward sloping trend line, okay? This has been the first time that we've actually seen like a break above that trend line. Now, again, if we get a higher percent, so this is 0.54 or 54%. So this is showing 54% of the stocks, they're trading above. Now, what does that tell us? It's better sentiment, okay? We go back to where we were here just a couple days ago. We are at a fresh new low, okay? If you got a fresh new low, you actually have more probably bearish examples, or they have been going down. To see this actually going up, this is a welcome sign for bullish investors. And yes, I did sleep with this green shirt on all night. Yes, absolutely. Now, the biggest thing is when you look at the number of stocks above their 200-period moving average, that is actually it's not kind of like a diagonal breakout, if you will. It's a diagonal breakout on a shorter term stance. This is not getting above the prior high. The key word is yet, okay? So this is the number of stocks above their 200-period moving average. There's the ticker symbol, and that's something to kind of continue to watch. Now, like kind of what it's doing, like the fact that it got above where it was 2 days ago. Now, remember, if we see this with the stocks above the 50-period moving average, stocks above the 200-period moving average, that must mean the indexes look a little bit better. The VIX is actually going down. Hallelujah. And the biggest thing is there's probably some sectors getting a little push. Don't get too far ahead of me yet. Now, when we take a look at the SOX, now remember, this is an important one because remember, if the market's going to go up, it's going to come through the NASDAQ, it's going to come through the SOX, it's typically going to come through the Russell. These are three sentiment gauges, okay? If the market's really going to go up, SOX, NASDAQ, Russell. If people are buying these, it doesn't matter what your neighbor says, your coworker says, your mother, your dad, your brother, your sister, your uncle, your aunt, it doesn't matter. If investors are actually buying these three, one of them, okay, we're actually starting to see some strength. This is a better sign as far as the SOX. Now, are we saying all stocks in the SOX? I'm not saying that. I never said all, but a better sign for the group in general. Now, what's the reminder on this? Does the investor have to buy an individual stock? No, they might buy the group, okay? Kevin and I will actually teach back on Friday. Now, the biggest actually thing is when we come, let's say, to the Russell, let's go to that real quick. Now, remember, we kind of saw a pretty big push on the Russell. I mean, it was hard not to see it because it poked us right in the eye, okay? Or right between the eyes, literally. Now, if you look at the Russell, it's kind of setting up what some might really call like a bull flag pull. I remember, this is a monster so far. 1, 2, 3, and just to prove that I can count to 4, you're going to see that we got 4 days up, and it's just been nothing but straight up, okay? Now, by the way, if you look at the Russell, people are not talking about this. The Russell is within what? 2% of the previous high, okay? And if we go back and really take a look at that, geez, I mean, how quickly can it bounce back? Now, I don't know if you've ever heard of that little kind of study where they said, hey, you know, the first 4 to 10 days of the market or stocks bouncing back to the upside, that's a large percentage of the movement. And this is why people like to invest when the volatility is high, because they're expecting some potential snapback. That Russell from all-time high or the recent high, it's only down 2% from the recent high. We haven't even had a higher low yet, okay? So keep an eye on the small caps. Now, does someone have to buy small caps, the stocks themselves? Could they buy the basket? They might consider buying the basket, or I'm going to say the group. Now, the biggest thing is when we look at the NASDAQ just real quick, it's better. We actually had an old channel. Today, we went pokey above that 25,130. Hallelujah. Okay. Now, when you go back to this, you're kind of like saying, geez, I wonder what the VIX is doing. Now, remember, when the VIX is high, if you're going to sell when the VIX is high, or let's say, when we say high, our high is anything above 18. That's getting high. Okay. When you start seeing that VIX, let's say mid 20, high 20, etc., that might be the worst time to sell stocks because they've already been pushed down. Now, what do we actually see here? Not a bad sign. We actually see just kind of the VIX falling through the floor. Come on down, is what the bullish investors would say as that volatility. So think of this like you own a house on the lake. And a while ago, there was like 3-foot waves out there, choppy water. Well, in that case, you probably are not going to go out there and go tubing, okay, or kayaking, right, in those choppy waves. You want to try to get in that water maybe when the waves are dropping down and get it to where that VIX is maybe sitting right between 12, 15, maybe 16, and the water becomes a little bit more like glass. You're kind of more enjoying it. And that's kind of like what investors try to do. Get in when the volatility or the waves are actually dropping and there's less pessimism in the market. There's less pessimism. Some investors try to get in. Now, when we talk about, if I were to ask you a question, what sector stood out to you today? I know it stood out to me, but I want to hear it from you first. Now, we know that all investors are not the same. Some investors, they like to actually buy growth stocks or, sectors. Those sectors, like when we look at, let's say, technology, better. We actually have a crossover on technology. I'm not saying it's the strongest, but it's better. Again, you would at least like to see that technology is going up if the investor is going to try to get in something. If we look at the discretionaries, which again is kind of important, if we look at discretionaries, you're going to notice the IXY you're going to see that that's better. I mean, if we're talking about what one went up stronger than the other, is it discretionaries or technology? It's discretionaries. Now, per the question that we said before is, could some of these discretionary stocks, which could be holiday related, could they benefit here? And boy, I mean, a pretty big snapback to the upside. Yes, there was a lot of selling, but there's been a lot of buying back to the upside as well, taking advantage of people maybe getting out of some positions. We don't know why they got out. They could have just got scared. They could have just said, look, I don't want to be in anymore. Now they're going to see it going back up. Now they're like, oh, God, thought we were going down. Now I might want to get back in. So the biggest actually thing is those two are standing out. We talked about the stocks, but I want to kind of point out the transports. Now, if I say transports, we don't need to run a search. Think about this for just a second. Transports. Transports what? Well, it could be airlines. It could be semi-trucks. It could be water transportation, like could be like cruise ships. It could be shipping containers. It could be railroads, all of the above. Now, remember, if that sector is actually going to the upside, it tells us something in there is moving to cause the group to push. Now, can you tell me, for example, what industry group is getting a push and what stocks are getting a push? Now, don't just think I'm going to roll out the red carpet and give you all the answers. Well, one of the spaces, okay, now, by the way, so there was a stock. Now, could we include FedEx in there? We could. We talked about that on Monday. We re-mentioned it on Tuesday. And you're going to see that, yeah, a little push to the upside. And by the way, it's not really giving back. This kind of has your classic ascending triangle type look to it. Little breakout, close above. Not really a pullback yet. Now, I want to go into the one question that was asked. This is a holdover question from yesterday, but it's going to directly relate to what we're just talking about. Robin's question from yesterday is, how can one differentiate between a flag forming and a top forming? The biggest thing is when you talk about like a flag, it's usually going to be something where the pullback is probably 2 to 3 weeks, typically at the most. Flags are momentum-based type setups. If, for example, that we actually do something like this, and this goes longer than probably, let's say, 3 weeks plus, you are getting a top forming. And you have lost some of that momentum in the shorter term. Remember, the flag, whether it's a bull flag, whether it's a bear flag, those are momentum-based trades. Now, all of them, can you have a flag on a weekly chart or a monthly chart? Yes. But we'd probably say the bulk majority of flags, they're momentum-based trades and or investments. So Robin, that's my answer to you. If we're not actually breaking to a brand new high, maybe after 3 weeks-ish period of time, you probably are forming a top. Watch the higher low, watch the area of support. Now, the other thing is, just real quick, is I want to say something on the MACD there, right? Usually if we're making a bull flag, a lot of the times, not all, the bull flag, the MACD can stay above the zero. If you're getting a top to form more than not, you actually get the MACD where it actually starts to drop down and struggles to stay above zero. That's something that I'd be watching, okay? Now, some of the stocks, and let's kind of start here for, well, let me finish on the sectors just real quick. When we look at, let's say, some of these sectors, like, say, staples, now, again, not everyone's the same, okay? Some people like different type of stocks, and for some portions of someone's portfolio, they might like different types of stocks for certain reasons. Staples have actually gotten quite a strong push here today. You're also going to notice if you look at the healthcare, that actually did go to a brand new high yesterday and touched it briefly here today as well. Utilities, for example, just real quick, is trying to get a little reversal. Divergence in the shorter term, yeah. This is also at that point where we could be getting to a diagonal resistance break point. Be watching that. So we're getting kind of, now remember what we're talking about is it's not just one or two sectors, right? We're getting more participation from more sectors. It's called market breadth. That's a good sign, okay? Now here's the deal. When we talk about investing, we're going to try to pick out maybe one or two sectors that maybe might look the strongest or something maybe the investor says, I want to focus on. The two areas that we're going to focus on here today are transports And we're going to focus on this area, the IXM, okay? Why is that? Because when you look at a number of the stocks in there, there's a couple stocks in there that are quite strong, okay? So we're going to focus on those two areas. Our job now is we're going to go look for examples, okay? Now, here's the deal. If I go, for example, look at, now, by the way, do want to say one other thing real quick, else I'd feel like I didn't do a good job. If we go to, let's say, the basic materials, that is also an area. Now, remember, the investor doesn't have to buy individual stocks. They might buy the group of stocks. They might consider it. And what you're now going to notice is this is pretty significant from the basic material group as well. Again, what we're talking about is more participation. Now that we discussed that, now let's kind of go into maybe some of the stocks that are in the transport space. Now, one of the stocks, and remember, you don't have to be in the stock market to kind of say, man, maybe Delta, okay? Now, if you said, for example, well, James, where could I see an example? How did you know? How did I know? I did the routine that I tell you every time that we teach a class, okay? And what is that routine? We look at the Dow 30, NASDAQ 100, the S&P 100. Could we look at the 500 as well? Yeah, sure. But we're going to look at the top three first. Dow, S&P 100, NASDAQ 100. Looked at all of them. Look at them every day. Now, what I'm going to do for a visual point, going to go to visualize for just a second. And if I look at, let's say, the S&P 500, here in white, those are the sectors, right? And what I'm going to do is now remember, when you talk about transports, they are going to be in industrials for the S&P 500, okay? Now, if I clicked on this on the left-hand side, said, could you show me industrials / transports? So a lot of people might ask, well, how did you find them? Well, you're going to see that anything that has that lighter color green to it is getting a stronger push. There's Delta. There's the UAL, there's Love, and you're going to see, and so on. Those are the three main ones. Now, what I'm going to do is I'm going to go back to Delta for just a second. Now, if we said, okay, so what I'm going to do is I'm going to bring up just real quick a list of stocks. Let's go back. Let me make a quick list, okay? And what I'm going to do here is I'm just going to label this as stocks for webcast, okay? And what I'm going to do is I'm going to put this in a list. I'm going to put Delta. I'm going to put Love, and now remember, we visually looked at the sectors. When we looked at the sector, we thought to ourselves, what are some stocks in the sector? Step two, we went to the market watch, we went to the quotes, we just drilled down in the area. We looked at the boxes that actually were showing us the stronger coloring, that lighter green, and now I'm just going to say, look, if I only put up these three, what do we have? Well, if we take a look at this, now remember, if you're colorblind, I'm not making fun of that, okay? If you are colorblind, greens or reds or whatever, you can change the color of the box. I had a question on that, and I want to address that. You can change the color on the box, okay? You can go into the custom script, and it'll say green. You can just change it to whatever color is best for you. I don't know what's best for you, but green is best for many investors, okay? That doesn't mean it's going to go up higher. It might, okay? About ready to find out. Now, if we take a look at this, we have trend on the daily chart, okay? Trend 3 on the daily chart, trend 3 on the weekly chart. When we look at the relative strength is really based upon a duration of time. This is no different than like what's your GPA for your freshman year, what's your GPA for your sophomore year, what's your GPA for your junior year, what's your GPA for your senior year, what's your cumulative GPA over time. It's the same idea. So relative strength is not about just one specific duration. We can see different durations. So if the investor said, James, I'm more shorter term in nature, they're probably looking at the 5-day, 1 week, 10-day, 2 week, 21, 1 month at a time. If you said I'm more of a shorter term type of investor, you're probably looking at more of that. Now, if you said, James, I'm more of an intermediate to trend trader, well, you're probably top heavy in these, wanting to make sure they're showing strength compared to the S&P 500. And if you're talking about timing, well, that's where the shorter term duration comes in. Speaking of timing, when we actually talk about timing, bounce, these are breakouts. This is also showing where are we in the breakout. And this is also showing us the color of the moving averages and the duration of time that the moving averages has been that color. And do we have a crossover? Now, just real quick, let me show you what we mean by that. Where are we at in that breakout? Well, if the breakout is today, it's going to say today breakout, BO. Now, it's not BO with bad odor, today breakout. If we take a look at this as continuing the yesterday breakout, So you can see it right here. Okay, now, what I'm going to do is let's go back to this. This actually has, now, when we talk about trading, if we kind of said, what would the investor want to know in terms of trading? They might say, look, I want to be familiar with, let's say, price patterns, right? Maybe it's bull flag, bear flag. Maybe it's ascending triangles, all of the above. In our class, a theme that kind of comes across quite a bit is cup and handles, okay? It also is channel-based type trades where we had a equal support and equal resistance. We bounce in the bottom of the channel, we try to come up to the top of the channel, and or we break out of the top of the channel, and we use the channel as a measurement technique. Now, what I'm going to do is I'm going to actually right-click right here. Now, if someone said, well, James, could maybe try to buy if we fall back to 62 to 38? You might, sure. Could I actually maybe try to buy at the middle of the candle? Sure, okay. In the example, I'm not going to do that. If we had a little bit more time, I would say, hey, let's practice that. We're just going to try to get in right where the price is now, okay? So if I go back to, let's say, Delta for just a second and say, where is it? I'm going to right-click on the chart. We're going to go to Buy Custom. Now, why are we talking about stocks? Well, this is a stock-based class, okay? So what we're going to do is we're going to go Buy Custom with OCO Bracket. Now, when I come back to this chart for just a second, I'm going to change the target limit to GTC, data GTC, okay? So when we go back to kind of look at the channel width, now it's not to say that, for example, it's going to do this, but if we said, look, the width of the channel is about 661. Now, sometimes people will say, well, James, if enough people are thinking the exact same thing, it could go back, it might try to go up just based on people's expectation. Yeah, I don't know if there's like what's the major point there, but yeah, sometimes things, if people think things go down, things might go down. If things, for example, sometimes if enough people think it's going to go up and they do actually buy it, yeah, it could go up. Now, not 100%, but that's the idea, okay? Now, what we're going to do in this case, we're going to put that target right at 69 and change. That's 69 and change. I'm going to put it right there at 69. Now, if we're talking about setting a little tighter stop, which is really where the breakout line was, 62.38 less 2%, it's going to give us 61.13. Now, remember, you know, how are we bringing fundamentals into this? How are we bringing fundamentals? What have we talked about this week that might play into the fundamentals of, let's say, airlines? Well, it's something that we've talked about this week. It's not hidden. If we're going to be, let's say, long airlines, a lot of investors like to kind of see that maybe the oil prices are down. Now, this is not jet fuel, okay? We're talking about just basic oil prices down. If these actually prices drop, this is one of the independent variables that might actually make the company a little bit more profitable. Number two is strength of the economy. Number two is how many people are flying, consumer-wise, how many business travelers, and so on. There's not one variable. There could be a number of them, but this is probably a good chunk of it, okay? So that's something, if we kind of see the crude oil keep going down, could actually, and by the way, if they keep the fare prices at the same level, they might actually have some extra potential gains. Now, what we're going to do is trade number one. Got an entry price, okay? Got a target, and then we actually got to stop. Now, what I'm going to do in this, just going to do 100 shares here in this example. This is the paper money simulated trading. If you're not practicing the paper money trading, practice along with this in the paper money account. We're going to go ahead and say confirm and send. And there it is. So there's the capital outlay for the shares, not a commission. And if that's what the investor wants to do, we're going to send the order. Now, the one thing we want to kind of point out also as well is you're going to see that if this one is actually going up, could you actually have something else going up as well? Yeah, you're having UAL. Now, by the way, the movement in UAL in the last 4 trading days, has been a 14% move. Now, what's my point in this? When the VIX is high, mentally, emotionally, people tend to be in the garbage can. Why? Because they're watching the portfolio go down and they're just saying, I hope I can get back to break even. Okay? When that VIX is the highest, the likelihood of a snap back rally becomes, well, a lot higher. I mentioned that yesterday. As that VIX actually goes higher, the cost actually goes higher to protect. And it becomes, well, less probability that they're right, okay? And a lot of times things kind of can get, let's say, VIX up here, stock prices down here. Well, that VIX doesn't always stay up there for that long. And sometimes the VIX can go down, which means the stocks actually come back up. This is the last 4 days, 14%. Now, some people might say, I'll take that for the year, okay? So when the VIX is high, I want you to focus your mind on saying, what opportunities are we seeing out there? Where am I starting to see the 1, 2, 3 methodology? Uno, dos, tres. And with that, where do we start to see, for example, a little move to the upside? Now, here's what happens. We're all technicians when the market's going up because it's easy, okay? But when the market has been down and then starts to go to the upside, all of a sudden we doubt the technicals. Well, it's usually because we rode some positions down and we didn't follow the sample plan, and now all of a sudden we just doubt everything. That's not technical analysis. It's because the investor did not think that the exits were exits, and they didn't want to sell. And now it's got them 180 degrees backwards, okay? And now they can't see the new entries. So remember, trading is not just entries, it's exits as well. Now, the one thing I do want to point out with, let's say, love is that if you said, James, I want to kind of practice using a lower dollar stock price, could we just put this one in just real quick? Let's actually go to this lower price. Not everyone's going to trade the same amount of capital. If I went in and said, hey, love, just real quick, and let's take a look at the fundamentals for just a moment. I'm going to come in here and I'm going to right click on this. That's a brand new high in the shorter term. Now, a lot of the questions I get here is, how do you find the breakouts? Easy. Okay. How is it easy? The breakout, if you said, what is a script or 2 scripts to find a breakout? Well, we just look at a 20-day duration of time, which is 1 month. If we actually pull up a list, now it could be our watch list or an index list, etc. You got Delta actually hitting a new high in the 20-day, short term. 55-day is more intermediate. So those are 2 scripts right there. Well, where do I get the scripts? Right on my X page. Okay. Now, if you said, where are they? You're going to see that 20-day high, by the way, this is not new. There they are right there. Dadgummit. I hate when it's right there. So in blue that's what you want to type in the, when you actually go right here, go set up open shared item. What you see in blue on my X page is what you actually type in. It is case sensitive. Okay. Now the third one could actually be, well, could I just use the breakout instead? You could. I like to use the breakout because I want to know what type of breakout. What do you mean by that? Well, if it's 20-day, it's shorter term breakout. The other thing is right here, 55-day, that's the more intermediate breakout. What happens if you actually have both? Well, it's short term and intermediate. What happens if you only get, let's say, just the 20-day? Well, it's short term. It's not intermediate. The other way we could actually see this visually is by going to that second chart we have. This chart right here, remember, these lines right here on the second graph, you're going to see that right there, that orange line is the 10-day high. 10-day if you like to trade short term. The blue line is the 20-day high. The white line is the 55-day high. So if you said, well, look, I'm going to pull up any stock, Apple, and said, is it breaking out? We would answer the question, well, are you touching any of the lines? Yes or no? If you're saying, James, I'm touching all of the lines. Matter of fact, all those three lines are on top of each other. Well, that would be an example of a breakout. So those are different ways you can actually see breakouts. Now, if you say, I don't have this, could you send this out in the chat just real quick? Yeah, let's do it. Okay. Now, here's the deal. Those are the tools. Now, you can buy the tools. It doesn't mean you know how to use them. That's why we're practicing talking about them. Okay. Now, what I'm going to do in this case is I want to also go back to, let's go back to the love. Let's kind of show that sample trade. Now, here's the deal. We're going to right click on that chart. We're going to go buy custom with OCO bracket. Now, do you think there's some correlation between these charts? And the answer is, of course there is. Okay. Now, what I'm going to do is I'm going to put $38. Okay. $38 is pretty much getting to that old high, maybe going higher. Are we saying that it can't go higher? No, I'm not saying that. We're just going to kind of put a target right at that prior area. 32.77 is just 3% below 33.79. Okay. Now we're going to show 100 shares here. It's not too many shares given the proper position size. Data GTC, data GTC. Now on Monday we did the FedEx example. Okay. Here's Wednesday. And we did the example of Delta, a stock trade, and Love, as well as a stock trade. So there's 3 stocks in that area. Now, if I come look at this for just a moment, I just kind of confirm this. Target, stop, there it is. Capital outlay, not a commission. Quick reminder how that stop works, right? If that stock is purchased, and the stop is 32.77. It's saying if we go to that price or less, sell the stock. It's not saying it's going to sell exactly at 32.77. It could fill at a lower price. That's the risk of setting the stop. If you say, I don't like that, you might consider maybe a different type of strategy where you try to define where's the place that you're trying to sell, maybe for a period of time. I'm going to go ahead and send that, and there we go right there. Now, yeah, I'm typically always in a giving mood. Now, question from Scotty was using the 1, 2, 3 and using CMG as an example. The stock is above the 1020 with a cross, but the stock has not crossed the high of the gap down bar. Now, when you say CMG, it's making me a little nervous. Okay. So remember, whether we talk about, let's say, so when you look at this chart, kind of, I wanted to kind of set in for just a second. What do you notice? So first thing you notice is, dadgummit, this is not an uptrend. Okay. If I used a ruler and said, look, we started here and we're here. And what I'm now going to do is I'm going to connect these 2 X's from the start to the finish. And I want you to imagine that I kind of placed a ball right on that ruler. Would it roll down or up? Man, it's going to roll down pretty good. Okay. So here's the problem. When we look at something like this, could it reverse back up? Yes. Now, I don't know about you, but I think the first thing that the investor might say is they want maybe an uptrend over the last, maybe let's say 1 to 3 months. They want to see an uptrend. This is the first yes or no. So if we said that's what we like to do, we cannot look at something like CMG because it doesn't meet that. Last 1 to 3 months have been down. So if someone is trying to trade this, now, by the way, why is that important? Well, it's because when we talk about bull flags, we're looking for something where it's a short-term pullback in the upward trend. If we're talking about something like Cahold, we're looking for a bounce signal in an upward trend. When we're talking about a moving average crossover, we're looking for that moving average crossover, short-term pullback in the upward trend. So this is called going counter trend. Now, it's not that it can't work. It's just if you said, look, if you had 10 example trades that you could do, would the investor say, look, I'm going to put 8 out of those 10 trades in counter trend trades? So when I say counter trend, we're actually saying that the shorter term trend, maybe days to weeks, is going up, but that trend on a 1 to 3 month basis is down. Okay. Now, I don't know if you just like to paddle up the creek for just to see if you can do it, but man, it can be a little hard. Okay. So if we went back and look at this, is it actually getting a crossover? It's had a crossover. If we actually go back down to what we have talked about, I'll restate this. When we actually have a gap down, okay, the closing price on the green candle becomes resistance. The closing price. That closing price is at 32.57. Where we gap down from is in the vicinity of 38.77. So could it in the shorter term try to go back up? It could. Now, again, if we're saying we have a limited amount of capital, which is probably most people here in this room, right? Might the investor choose that to do the bulk trades and these type of strategies? Probably not. But if we go back to kind of that, the question is, when we're talking about the 1020 is not cross above the high, do you wait for the price to go above that? Well, here's the deal. We already kind of, in that example, we already have that. I already have the cross. We already did get above the resistance. So if someone's trying to play a counter trend trade, it really probably happened yesterday near the close and or today on that breakout. That's probably how a lot of technicians would read that. Okay. Now let's kind of go back to another example just real quick. Okay. Now, one of the other examples I want to pull up, when you look at a couple of these financial companies, example given like MS, when you look at another company like, for example, BAC, you look at another company like C, you look at another company like WFC, you look at another company like GS, JPM, right? Some of these companies in this sector, they actually look fairly strong. You look at GS, it's a bigger dollar stock. Probably is not going to give us a ton amount of shares, but there's a decent trend there. Now, if we go back to, let's say, the BAC for just a moment, or we actually go look at the example of MS, I'm going to use the example of MS here. Now, if we go back and really look at this over the last, so if we went back and said, look, criteria number one, we want to see an upward trend over the last 1 to 3 months. It's a yes or no. Okay. Do we have an upward trend over the last 1 to 3 months? Well, if I went back, let's say the 1 to 3 months, that would get us to August 26th. If I went back to August 26th and said that over the last 1 to 3 months, 3 months starting here, this is where we are here. If I connect the dots, there's some type of uptrend here. Okay. Now, that's not implying that it's going to continue to go up higher. It's just, well, that's what it's done up until now. Now, when you take a look at this, you're now going to notice what we're going to do is, now, we've had a little push over here the last couple of days. You might say, James, I'm going to try to get in some now, but maybe also try to keep some powder and or capital if we were to fleeg back, okay? If we were to pull back a little bit, maybe try to buy on that dip when the moving average is coming up to try to meet the price. All right, now, let's imagine I said to myself, oh no, it's too high. Well, let's kind of just double check something real quick, and we have it in the paper money account. Let me go back. Is it too high? I mean, isn't that always the question? Is it too high? Well, let's go back and look at this for just a second. Now, if you don't have this chart, let's kind of just call this measuring how far we're off the moving average. The blue line is your classic 10-period moving average. The yellow line is just really what? It's just an envelope. It's just telling us, hey, the yellow line is 3% above the 10-period moving average. So what does it matter? Well, the investor, if they're trying to buy not too high, by the way, could everyone help me express happy birthday to my wife who is turning 39 today? She's right here. It's her 39th birthday. Yeah, happy birthday to Amber. I haven't told her happy birthday yet. So happy birthday to Amber. And, if it's your birthday as well, happy birthday to you. By the way, birthdays are important, okay? You got to celebrate your birthday. Now, the biggest actually thing is, if you look at this chart, if the investor is talking about buying, they're trying to maybe buy at and or near the 10-period moving average or up to, let's say, 3%. To get an entry potential setup, you got to get the stock to go up. What does that mean? The stock is going to be a little elevated. So this right here is going to be 5% above the 10-period moving average. And this right here is going to be 7% above the 10-period moving average. So if you look at a lot of buy setups in general to maybe consider entry, they're probably in kind of that between the blue and the yellow line. If you're waiting to get in until it's touching the red line, so first off, as you do get higher, and this is why investors are apprehensive, you buy at the red line, you tend to actually get prices pulling back because it's a little elevated off support. If you buy at the white line, which doesn't happen very much, it tends to revert back down closer to support. So this now kind of gives us, now you might say, well, this is kind of reminds me of maybe Bollinger Bands. Similar, okay? But this is actually looking at the percentage distance from the 10-day exponential to the yellow line, the 3% above. So it's a percent above. 3% yellow, red 5%, white 7%. Now, why does it matter? Well, because if someone actually buys 3% above the 10-period moving average and they set the stop 3% below, their forecasted risk is going to be about 6%. So what it is, okay? Now, is it guaranteeing what that risk is? No, because if you set a stop, it's not guaranteeing where it's going to fill at. So the investor's saying, look, they're going to try to take a calculated risk. All right, now, let's go back to this for just a sec. Example trade on this. Now, by the way, if you don't say I don't have that. Now, by the way, if you're watching this on the recording, now thank you for those birthday wishes. She appreciates that. Yeah, I tell you what, 39, I tell you what, it's unbelievable. Now, here's the deal. Let's kind of go back in this example. Let's go show you a different way to kind of do this. Some of you are not familiar with that charts. We're going to go to the trade tab. We're going to right click on the ask price. We're going to go to buy custom with OCO bracket. Now, what we're going to do in this example is, let's say the investor says, look, I'm going to set that stop. Okay. Now, what I'm going to do is I'm going to set the stop right at that purple line. Okay. Now, that's the initial stop. That does not necessarily say that's where it's always going to be. Okay. Now, if we got in this position, which we're going to try to, I'm going to go dated GTC. That is the initial stop. Now, over time, if the stock can go up, or if it does, we might just go back to one of those charts we normally talk about by just looking at the lows. So what do we mean by this? If this stock actually goes up, just like it kind of did back here in this previous time, if this stock actually goes up, we've talked about this before. This isn't new, okay? This is really looking at the day's low, different durations of time, the lows. And if the investor's trying to get these lines to go up, because it represents if this line is actually going up, and if it's going up, and you set a stop using an 8-day low, the investor manually is moving up the stop. That is after the position is entered. That's after the position is actually starts to move up, if it does. But the initial stop is just going to be that purple line, which is just sitting right there. So if we start to get this push to the upside, yeah, I'm going to go look at that other chart and say, could we move up the stop? Okay, dated GTC there. And if we went back and said, okay, where's that upper maybe potential target if it broke out? Now, what you're now going to notice on MS is it really has maybe like a diagonal line, and sometimes, not always, okay, sometimes these old highs, they might extend to the right. Now, if we look at this, if it extended just straight up, now I'm not saying it's going to do that, but if it went straight up, it's probably about 174-ish. But let's say it maybe takes a little bit more time and we say, look, maybe in a week or two it tries to go up. Let's say we set a target at 176, which is really the diagonal line of resistance. Now, this is our style. It doesn't have to be your style. Last comment I want to say is here, we have a diagonal resistance target, and then we have a stop. When I first got started investing, I was so fanatical about looking at reward to risk. I've talked about that. Some investors like to set a little bit more wider stop to try to allow a lesser chance of getting stopped out and to try to allow the stock to move. Okay, that's what this is doing. So in our last trade example, we did Delta, we did Love, we actually did MS, 3 trades here. We're going to go ahead and confirm and send that. And so what I want you to do is I want you to go out and practice using these scripts and the charts. There's a couple of examples in sectors, in the indexes, where we're starting to see some of those bullish setups. I want you to go out and practice trading what you see technically, not emotionally. Emotions are not technicals. They're emotions. Now, I'm out of my time here today. Stay tuned for our next webcast coming up right at the top of the hour. That next webcast, if we go to Learn, Schwab Coaching, and if we actually go to the live webcast and virtual workshop, that next webcast coming up is going to be, we pull this up, it's going to be Managing an Options Portfolio by Brent. I want to say thanks to Cameron May for answering those questions in chat. Also, happy Thanksgiving to you. Position sizing still applies. Remember Lululemon stretchy pants and all. Remember to subscribe to the Trader Talks channel right on YouTube. It's free, and hit the thumbs up as well. Remember, this has been the class on trading growth and value. Thanks so much, and have a great day with you and your family in the next couple of days. Take care. Bye-bye.